Hello, welcome to the Wiggin Sessions. I'm your host, Addison Wiggin. I have with me today Jim Rickards, who I'm sure you're familiar with. But what I'd like to do to start today's episode, or session as we call it, is have Jim talk about his own experience and give us a clue into why he views the world the way that he does, because I think you'll find it particularly interesting given the economic times that we're in. Welcome, Jim.
Thank you, Addison. Great to be with you.
Yeah, it's always a pleasure to talk to you. I learn something new every time. So if you can, I know the story, but if you could just kind of like bring people up to speed on like your experience in life. Start in New Jersey in, what is that, in the 90s, right?
Well, if you like, I can start in New Jersey in the 90s. I can start in New Jersey in the 1950s, but I'll try to narrow it down a little bit. I probably take 100 hours. We'll try to do it in 10 minutes. Yeah, I mean, background, I went to high school. I graduated from Cape May High School. When I was there, it's still largely true, but certainly when I was growing up there, I went to high school there. It was mostly rural and fishing. Those were the two occupations. We had, the run of things you could do, but most people either were farmers or fishermen. Those were the two main things. Now, Cape May is a major tourist destination. So it was a summer Cape May and a winter Cape May. And the population actually increased by a factor of 5. It went from like 10,000 year-round population to 50,000 in the summer. And there were a lot of wealthy families from Philadelphia and Baltimore. The rich New Yorkers tend to go to the Hamptons, or people go to Newport. But for certainly wealthy families in Philadelphia and Baltimore, Cape May was destination. It was in the 1880s. It was known as the Summer White House. A number of presidents stayed at Congress Hall, which was built in 1813. Still there, by the way. I stayed there not too long ago. So interesting place. So yeah, we never had any problem getting summer jobs because there was, like I say, there was always a call for help. But it was, the other 9 months of the year, it was rural, fairly poor. We didn't feel poor. We were. I mean, if you did a demographic analysis, I guess we fit in that maybe lower middle class society, certainly not middle class, or certainly not upper middle class, but we didn't feel that way. We had a good time. We played sports, we worked on our studies and so forth. But my high school class, for example, was 40% college bound, 60%, that was it. So for 60% of my class, my friends, I was class president, so it was pretty good, pretty well acquainted with everybody. That was it. That was the only time they were ever going to wear a cap and gown. It was the only time they were ever going to be handed a diploma. It was a very big deal, our high school graduation. But I did pretty well academically, went to Johns Hopkins University. So that was my introduction to Baltimore. Got a graduate degree there. So I ended up living in Baltimore for 5 years. Been back many times since. I still go back for a lot of reasons, but
yeah, our fault.
Yeah, it's your fault. But I love Baltimore. I always enjoy going back, and I actually lived there for 5 years. Then got a graduate degree, master's degree in international economics, but it was sort of the worst recession since the Great Depression. This was like 1974. The younger people in the audience don't remember what it was like in the 70s, but that was a really severe market crash. I was getting an early education in market volatility, and there weren't too many jobs around. So I said, well, I'll keep going to school. I went to law school, went up to the University of Pennsylvania. And then when I graduated, I got my law degree, I started working in New York. I was in the National Tax Council at Citibank, but I went nights to NYU and I got a graduate law degree in taxation. My father did ask me at one point when I was going to stop going to school, but about the time I was 30, I finished.
Yeah,
finished up.
We might turn that around on my kids.
Yeah, exactly. Yeah, but I was banging out the degrees. I got 4 degrees. But it was International Tax Council, Citibank, and then that was a portal or gateway, whatever you want to call it, to the world. I mean, Citibank, one of the reasons I joined them as opposed to a law firm, they were in business in 98 countries at the time. This was in 1976. So they had more overseas offices than the State Department had embassies. So if you really want to see the world, you could join the Foreign Service, you could work for Citibank, and I did. And I just, traveled many circuits around the world, started out in Europe, but moved to Asia, Pacific, and Africa. And I was the number 2 guy coming up the ranks. So my boss would go to, Tokyo, Sydney, and Singapore, and I would get like, Zimbabwe, Kinshasa, and Nairobi. Nairobi was fun, but yeah, I traveled quite a bit in Africa. So but that was an interesting time. It was a commodities boom. It was actually in the aftermath of a commodities boom. So you could see, when cocoa and copper and oil prices have been soaring in the 70s, which they were, there's all this money coming in. And then it crashed in the 80s. So the early 80s was the time I was out there. So you could see the aftermath, how the money was wasted. There was corruption. They built a skyscraper and then they couldn't maintain it. So when I got there, like the windows were falling out. They would say, look at this big skyscraper. So, but it was a really good education in development economics, a subject people don't know all that much about. In the mid 80s, I changed it up. I left after 10 years as International Tax Counsel. I joined an investment bank that was one of the top dealers in US government securities. So we were what's called a primary dealer. People are like, what's a primary dealer? Well, that's a list maintained by the Fed. And it basically is your permission to trade directly with the Fed. So when the Fed prints money, like how do they print money? Of course, it's all digital, but the way they do it, they buy bonds from banks and they pay for it with money that comes out of thin air. I mean, it's that simple. It's not more complicated than that. So the Fed builds up a balance sheet of bonds and the money comes out of thin air. Well, the Fed needs dealers. They need people they can call to do those trades. And they're very, very selective. And they're only today, it's about 20, the list varies. But my firm was one of the firms on that list. So we talked to the Fed. We were one of the few that could. So that was immersion in federal finance, fiscal policy, US government securities market. But this is the mid to late 80s, but that was the time when the derivatives market was taking off. Of course, traditional futures contracts have been traded in Chicago since the 1850s, but this was, these are swaps, options, swaptions, caps and floors, all over the counter, all off the balance sheet, we invented, this private team, we invented some of the contracts. I worked on the first credit default swap, sovereign credit default swap ever. We didn't have any forms. There were no membership organizations. We had to sit there and basically write the contract, which I did with some teammates who did the math. So it was a pretty exciting time. In the mid 90s, I changed it up again. You begin to get the idea that I either didn't know what I wanted to be when I grew up, or I prefer the word eclectic in terms of a career, but I changed up again and joined a hedge fund. Was there for 6 years from start to finish in the late 90s. We made a few headlines in 1998. This was long-term capital management. And prior to the financial crisis of 2008, the mortgage meltdown and Lehman Brothers and all that, the LTCM Fiasco was the greatest financial panic in the United States since the panic of 1907. It's not that there hadn't been, stock market crashes and the Great Depression was stressful, and, Penn Square and Continental Illinois, a couple of big banks failures in the 80s. We had the S&L crisis that just dragged on through the 1980s. So it's not that there was no financial distress, but in terms of a panic that actually did come this close to taking down the entire global financial system, that was it. And I negotiated that rescue and lined up against, I call them the 14 families with the 14 banks. The original deal was 16 banks were going to put in $250 million each, and that was going to be $4 billion, and that was the rescue amount. But Bear Stearns dropped out, and they got their they got their payback in 2008. No one shed any tears when Bear Stearns failed in March 2008. But Wall Street has long memories, and they remember Bear Stearns turning their back on the rest of the street in '98. So Bear Stearns was in distress in 2008. Again, no tears were shed. That was their sort of payback from Wall Street. The other one was Lehman Brothers, which just didn't have the money. So they scaled down to 100 million. Goldman, JP Morgan, a couple others scaled up from 250 to 400 to make up the difference. And we cobbled together 4 billion, all cash, 5 days. It was 5 days in September 98, no sleep. It's funny, the first day you're at the law firm, there were just hundreds of lawyers running around in different rooms. There was a tax room, a bankruptcy room, the foreign syndicated unsecured credit room, due diligence room, et cetera. First day, everyone's got a suit and tie on. Next day, the ties are down, the collars are open. The day after that, the ties are gone, the jackets are gone, the shirts are half open. No one's sleeping, no one's bathing. We're just working around the clock, but we got it done. But we were hours away from shutting every market in the world. That's not an exaggeration. It would have started in Tokyo and just going around the world. They would have reopened at some point, but we're looking at a global shutdown. From there, I worked at a couple of technology companies, ran a stock exchange, did a few other things. But after 2001, after 9/11, I got tapped by the CIA, the intelligence community, to work on counter-terrorism finance, which I did for quite a long time. And that was, needless to say, interesting. Some things I can say about that and some things I can't, but it was certainly taking a lot of practical experience, going back to, they were actually interested in me because I had converted Citibank Pakistan to Islamic banking in the early 80s. So I was actually one of the leading Western experts on Islamic banking. And of course, that was a big part of counterterrorism finance. But did quite a few things there, and then did a few other things. But by that point, I was sort of regular on CNBC, ultimately ended up doing Bloomberg, Fox News, a lot of other financial networks. But I also started writing books, and my first book, Currency Wars, and came out in 2011, was a national bestseller. Then followed up after that with The Death of Money, which was a New York Times bestseller. Not easy to make that list. And I've been writing books ever since. And around that time, 2014, bumped into you and some of your colleagues and started working with Agora and different imprints and so forth. And had a long career at this point in financial newsletters. So, like I say, a little bit of everything. But if you asked me to stitch it all together, I would say law, finance, intelligence, national security, economics. Those are all areas where I feel pretty comfortable. But but of course, you learn some lessons along the way. And I had gone, not me, but my family had gone through a bankruptcy situation in the early 60s. This is 1962. And at that time, the bankruptcy laws were a lot more stringent than they are today. Today, it's, you file, you do some court filings, there's some procedure, but you kind of walk away without a scratch and start over. But then, I mean, in those days, they took the house, they took the car, they put a lien on your salary. So even if you had a job and you were making money, a lot of it was taken right off the top to pay creditors. It was kind of no easy way out. So I was a 12-year-old kid at the time, but 12-year-olds are they're going through their own changes. And so all of a sudden to go from a brand new Chevrolet convertible to a 10-year-old Chrysler Imperial, or also Bill F98 with you see through the floor to the road, that sort of thing. Not getting new clothes all the time, living in a bungalow, $35 a month. I look back on it, and I've said this for a long time, but I'll say it again. It was the best thing that ever happened to me. Highly stressful for my family, not fun. I'm not making light of it, but it teaches you. It teaches you how to rebuild. It teaches you how to reinvent yourself. I was at that point that when we moved, I didn't have any friends because I lived in one community for, at that point, like I say, 10, 11 years, and had a whole network of friends. All of a sudden, that's pulled away from you, and you go into a new. I was in 7th grade, but we were so poor. The town was so poor. We had a 6-year high school, so we were on the bus with seniors as we were 7th graders. They were all in the back of the bus. I don't know what was going on back there, but as a 7th grader, you sit in the front of the bus. But you learned a lot. So I became very focused studies and got good grades. It's kind of how I got into college. My closet was a nail in the wall. You hammer a nail in the wall and you hung your hoodie on it, and that was, your jeans or whatever, and that was it. But it gives you resilience. I mean, I've never worried about money ever since. I've made a lot of money, but I always say, if you've ever lived through anything like that, you're like, you know what? If it all went away, I could survive just fine. And that's a great source of strength. It gives you strength for all the other things you have to do and all the other challenges you face. Because if you've never had a bad day, or you've never had, I believe it's called, the wheel of fortune, the reversal of fortune. Actually, I know people who have been very successful, made a ton of money, and various accomplishments, etc. That's all good, but they've literally never had a bad day, and a lot of them are very insecure. They're like, because they worry about that. They're like, oh well, what would happen if this went away? And having been through that, I know that you do just fine. You just have to kind of keep focused. Same thing happened in 1998 during the long-term capital situation. I was their lawyer. I worked there. I was there from start to finish, but I also had quite a bit of money invested in the firm. I was the lawyer. I was like, wow, I'm working with all these geniuses, and they did have genius IQs, and there were 2 Nobel Prize winners. I'm like, well, I'll just give them my money. That they know more about it than I do, and they'll do fine. And for 4 years we did. I mean, we kind of tripled our money, and then it went down 92%. So wasn't wasn't bankrupt, wasn't kicked out of my house, but that was a real setback. And once again, you just pick yourself up and you go from there. So I've had a couple of those reversals, and they actually make you stronger. I was working with a hedge fund in the early 2000s, and with my partner, we went to Zurich, Switzerland. We're meeting with one of the big hedge fund asset allocators further out on the lake, kind of like a suburb. But anyway, I ended up downtown at this dinner, and we're having a couple of glasses of wine, and they agreed to give us $50 million, so a $50 million allocation to this fund. And the guy leaned over to me, the decision maker, and said, he said, I know what happened at long-term capital. He said, I wouldn't give money to anyone who's never had a setback, because you know what it's like. You won't let it happen again. And I have more confidence in people like that than I do people who have never had a bad day, because that means they can be a little arrogant, or they can miss things. So I thought that I agree with that, but of course that's just like agreeing with myself. But he made a point of telling me that. And I thought it was very interesting, but it certainly lined up with my experience. Once you've been through something like that, you don't let it happen again. So yeah, a little bit of law, finance, banking, hedge funds, intelligence, national security, economics, writer.
Yeah, so let's move it along. Part of the reason I want to talk to you today is the Davos agenda was just announced last week. They got together in Davos, as they do, and you have a unique perspective on not just what they say, but also the people who are involved in that entire endeavor. And there's a lot of unelected people who are making decisions about the way that the economy will, not just the national economy, but the global economy will unfold from here. And they have ideas about the way that they want to impose policy, I guess is probably the best way to say it. So I know that so that's part of the reason I wanted to get your experience on the table before you start talking about the Davos set, is what I call them.
Yep.
They kind of annoy me.
Yeah. Well, there's a Davos set. I call them the global elites. I make the point that a lot of people who talk about them, write about them, the Great Reset, there are different names for it. I think the Great Reset is the one that's got the most currency at the moment. They're smart people, and they pay attention, and they can come up with some good analysis, but there's several steps removed. They don't actually get invited to those things. They've never met the individuals involved. And to a great extent, I have. I mean, I've met with, just like one-on-one conversations, not like waving in front of the audience, but, this is one-on-one conversations at length with, Ben Bernanke, Tim Geithner, the former head of the IMF, John Lipsky, and I once gave a private briefing, behind closed doors in Rockefeller Center, where else, right, to the head of Bilderberg. And if there's one group that's even more spooky and secretive than Davos, it's Bilderberg. Because I mean, Davos, you can kind of buy your way in, but Bilderberg is invitation only. It's a much smaller group, but I briefed the head of it, and he was very nice guy. And he at the end of it, he came over and presented me a gift. And I opened it. It was a vase with like kind of swirling glass, but kind of beautiful. In fact, it's right over here. It's on the shelf near my desk. But you look into it and it's kind of a vortex. And I thought, well, that was appropriate. You don't want to get sucked into the vortex. But so I've met quite a few of these people, and the point I make is that they're real people. We know who they are. I mean, it's not, you don't have to cook up a conspiracy theory. It's Mark Carney. Mark Carney's an interesting guy. He was the head of two central banks, actually three. He was the head of the Central Bank of Canada. He was the head of the Bank of England. And he was the chairman of the BIS. People are like, what's BIS? That's the Bank for International Settlements. That is the central banker's central bank. It's based in Basel, Switzerland. It's in a kind of skyscraper on the river there. And central bankers from all over the world, but obviously the G7 are the main ones. They meet there once a month. And there are no records. There's no minutes. If there are, they're not released. There's no accountability. There's no press conference. That really is secretive. I actually knew one of the guys as the vice chairman of the Fed. We were business partners in a couple of different enterprises, and he was the attendee for the U.S. This is during the Alan Greenspan days. Greenspan didn't like to travel that much, so he often skipped the monthly meetings. But my friend David Mullins went. He was the vice chairman of the Fed. He went as the U.S. representative, so he was inside the room, told me a lot about it. But Carney was the chairman of that. So he's the trifecta is head of three different central banks, including the biggest and the most secretive. Geithner, Bob Rubin, everyone knows him from Goldman Sachs, Secretary of the Treasury, but he's still around. He's the chairman of the Council on Foreign Relations, which a lot of people think is, as secretive as Davos. So I could get down the list, but the point is, we know who these people are. They're out there. They're giving speeches. You have to pay attention. But the Davos crowd, the Bilderberg crowd, the BIS crowd, they're known quantities. And I sort of steer away from conspiracy theories because you don't need them. I mean, it's not that conspiracies don't exist. They do, and you look for them. But I make the point that if you don't need a conspiracy if you have like-minded individuals. In other words, if enough people in powerful enough positions all have the same goals and they all agree on whatever it is they want to accomplish and how they want to do it, you don't need a conspiracy. They just wake up and do stuff and they're all in sync. What I always find it fascinating to look at where they went to school. And what you discover is that they all went to like one of 10 places. It's Harvard, Yale, University of Chicago, Stanford, maybe Columbia, maybe Wharton in the United States, or Oxford or Cambridge, École Supérieure Polytechnique in France. There's a short list of schools. At Berkeley, I would include. They all went to one of them. In many cases, they were each other's faculty advisors. Like when the younger one got the PhD, the thesis advisor was another one. And so they end up both on the same, whether it's the board of governors or they're at Davos together or whatever it is. They all went to the same schools, same short list of schools. They taught each other. They all studied the same text, and they all think the same thing. So if you can understand that, you can actually figure out what they're thinking, where they're coming from. Now, and the agenda is not that difficult either, because they tell you. Now, here's where it gets a little tricky. And the IMF is a good example. The IMF is what I call transparently non-transparent. And what I mean by that is they can't say nothing. They can't say, we're the IMF, but we're not telling you what we're doing. They have to tell you what they're doing. And they do. There are hundreds of publications, academic papers, speeches, spring meeting, fall meeting, annual meeting, et cetera, et cetera. but they have a certain jargon. They have a certain way of speaking. They have words and phrases that are not the least bit intuitive or plain English, shall we say. So, so a lot of times in the work I do, I feel like an anthropologist who goes into the jungle, studies the natives and
You
comes
have to
back
find,
out and tells
find the
everybody else,
bones.
what's going on.
Yeah.
But I guess what's unusual about me is you have a lot of insiders, and they're the people we're talking about, and you have a lot of outsiders who are throwing stones and criticizing, and it's a conspiracy and all that. But they don't actually, and they're smart people, and I'm not disparaging anybody, but they don't actually have the technical training that you need to understand what the insiders are doing and how they're doing it. And I'm unusual in the sense that I have 2 law degrees, and before I went to law school, I got a graduate degree in international economics with a specialty in development economics. Where I went to school is the #1 School of Advanced International Studies in Washington. It's part of Johns Hopkins University, but it's their Washington, D.C. graduate school. I mean, when you left there, it was like boot camp for 1 of 3 places. You either went to the IMF, or you went to the intelligence community, or you went to Wall Street. And I joined Citibank, which was the biggest bank in the world at the time. But you learned the buzzwords. I mean, I was the last class to graduate before they completely abolished gold as a monetary asset. It was 71. Everyone says yes when Nixon went off the gold standard. It's not exactly what he did. He ended the convertibility of dollars for gold, but he intended to be temporary. He intended to be temporary. They were going to go back to it. They just never did. And it wasn't until about 74 that the IMF just said, okay, that's it. You can be a member and not put up any gold. But that's when I was in graduate school. So we studied national accounts, and you had to understand gold as a form of money. It hasn't, if you're younger than I am and you know anything about gold, you either went to mining college or you're self-taught, because they completely stopped teaching it in universities. But I cut the tail end of that. So that's part of why I've always thought of gold as a monetary asset. But my point being, I speak their language, so I can read their technical papers without a glossary and understand what they're doing. So I think my insight into that whole crowd is definitely better than anyone who's not in the club. I mean, okay, Tim Geithner is in the club. So by the way, he went to the same school I did. Tim Geithner went to the School of Advanced International Studies. So did Madeleine Albright, so did a lot of other people very involved in what we're talking about. So I'm a little bit the outlier in the sense that I have that kind of intellectual training, speak the language, understand it, but I'm not one of the elites trying to, take over the world.
Yeah. So how do you go about translating what you see, say it's the Fed minutes or something basic? How do you translate that to the way that readers can understand what is actually being said to them? Because
Right.
it always seems like there's a sort of a ghosting effort going on.
Well, that's right. And
tell you one thing, but they mean another thing.
Yeah, and in my newsletters and in my books, I kind of I always say that people use the expression "dumb it down." They go, take this complicated stuff and dumb it down. I never dumb it down, but I do convert it into plain English. There are very few technical terms or jargons or integral calculus equations that you cannot put into plain English. In fact, if you can't do that, you should stick to the faculty lounge and not try to hold yourself out to the public. So that's exactly what I do. Let me just give you a concrete example. So prior to 2015, the Fed was, they did the taper. So the first taper, they're doing another taper now. We're in the middle of that. But from 2013, Bernanke started the taper. The taper was finished in late 2014. And then Janet Yellen took over, and they were getting ready for the first interest rate increase. That was the so-called liftoff, which didn't happen until December 2015. A lot of people expected it sooner. I didn't, but everyone was waiting for that. Well, so the FOMC was coming out with statements. They meet 8 times a year, so not quite monthly, but about every 6 weeks or so. And they had a code word, and the code word was patient. And they would say,
I remember.
we will be patient in deciding when to raise interest rates. So they were definitely telling you they were going to do it. And if you were in a carry trade is when you short dollars and you borrow dollars, which means you short, you buy yen or something else and you invest at a higher yield and you capture the spread. And that trade works fine as long as two things are true. If interest rates go up, your funding rate goes up, so you could very quickly go underwater. And if the dollar goes down, you're going to have to pay back more dollars. So, those are the kind of two dangers. Well, when the Fed said, we're going to raise rates, not saying when, they were warning you. If you were a big bank, if you were a hedge fund, if you were in the carry trade, they were saying, get out now or start to work your way out of it, because if we raise rates and you're on the wrong side and you lose money.
Yeah, now we're in that phase, right? Where they're telegraphing that they're going to raise what, 4 times?
The markets are betting 3 for sure later this year, maybe 4. There's some probability given to 4. Yeah, and the Fed is all about transparency.
So what does that do? For regular investors, like most of the people that are going to be watching this, what does that do to like mortgage rates and that kind of thing? Like if they start trying to slow the whatever, inflation is creeping its way in, there's some problems with supply chain and stuff like that is related to COVID, but if they're talking about raising rates, that means that the entire economy is going to slow down.
Well, that's my view in terms of what's going to happen. But just getting back to the Fed, a couple of things you have to know about the Fed. Number one, they're always wrong. I mean, if you want a good forecasting tool, figure out what the Fed's going to do and assume the opposite. I'm serious. It's a very good forecasting tool. The other thing about the Fed, they're very, very transparent. They pride themselves on it. They want you to know what's going on because they don't want any shocks. They never want to do anything where the market didn't see it coming, because that could sink the stock market or cause an asset bubble. It could be in either direction, but the point is that they don't. Just think of the Fed as an institution that never wants to surprise anybody. By the way, that's a change. I was around in the 70s and 80s when they never told you what they were doing. And that was part of the big deal about being a primary dealer. You got to talk to the Fed. You knew before anybody else in the market, because they would kind of drop hints and then it would sort of filter out from there. But if you were on that inside group, that was extremely valuable. Today is the opposite. They never want to surprise anybody. And they don't change quickly. I mean, I read all these things, some index, inflation ran a little bit hot, or unemployment wasn't as good as they thought. Everyone's, the Fed's going to change course. No, they're not. They're not. They need to see 3 or 4, even 6 months of bad data in a row before they say, maybe we got it wrong. They don't do it on a month. They don't do it even on 2 months, 3 at the minimum, and more like 6. So when they tell you they're going to do something, believe them. But there's nothing that I do that's easier than forecasting the Fed.
What do you think of their social agenda at the moment, like climate change or the pandemic or whatever? Like, where did that come from? Why are they doing that?
Well, this gets back to what we were talking about earlier with the Davos Crowd and Klaus Schwab and Mark Carney and now Janet Yellen, who's of course Secretary of the Treasury, have signed up. There is a global climate change agenda. Now, here's the thing on climate change. Is there climate change? Of course there is. There has been for 4 billion years. There's never been a time when the climate wasn't changing. I lived for 10 years on Long Island Sound. It's a beautiful, houses right on the water, a beautiful body of water. You can fish and water ski and wind sail and sail a boat and do all kinds of things, but it has a rocky coastline. And the reason it has a rocky coastline is that 10,000 or 12,000 years ago, it was a glacier. And glaciers move and they push the rocks out of the way. So when the glacier melts and becomes a body of water, you get a rocky shore. That's the difference between New Jersey and Long Island. The glaciers stopped at New York City approximately. They never got to New Jersey. That's why I love Jersey beaches. But in New England, we have rocky coastlines because we were covered in glaciers. So, okay, it was a glacier. Now you can sail your boat. That's climate change. But it took 10,000 years. And that's about the tempo. There can be ups and downs. We had Why did the Vikings get to Greenland in the 11th century? Well, the answer is it was a
Yeah,
lot
I mean,
warmer.
there's whole cities buried under ice right now.
Correct. And there were farms in Greenland. Now, today it's a glacier, but in the 11th century, there were farms. It's not that the Vikings were more hardy and could deal with and live on glaciers. It was that the weather was warmer. I'm not saying it wasn't tough to be a Viking. I'm just saying that there was this early Middle Age warming period. And then, when I grew up, you have to read, stories like Hans Brinker and the Silver Skates or whatever by Hans Christian Andersen. Well, I pictured everyone in Holland on ice skates going up and down the canals. Well, that actually was true in the 17th century because they had what's called the Little Ice Age in the 17th and early 18th century. It gets still freeze, I guess, but in those days, it was frozen solid every winter because and the summers were not warm. So whether it's the 11th century warming period or the 17th century cooling period or the ice age, now a lake or a sound or whatever, of course the climate changes. That's not the point. What we're looking at is not climate change, but climate alarmism, climate panic, climate fear. So then you always say, why? These things, once you identify them, you don't go, oh, I got that figured out there. You're trying to pull something off here. Well, what is it and why? The answer is global control. So they want global governance, global taxation, and global regulation and world money. That's the agenda. So I just gave it to you. It's like, I didn't break into a safe. I didn't steal it. It's obvious in what they're doing. Global governance, world money, and global regulation, global control. That's what they want. So how do you do that? Well, that's a solution. That's the end game. That's what they want. Well, if you want a solution, you need a problem because you're going to go solve the problem. So when you look at
Can I just be like really dumb about this and say, why do they want that? Because I've been asking that question a lot of people like you, but also like people around me, like who don't even think about this stuff. Like, what do they need control for? Like, why?
Well, I mean, it's part of human nature. I mean, what Alexander the Great, Napoleon, Hitler. I mean, you go down the list, there's a long list of people who tried to take over the world. Genghis Khan, he actually came close. He came closer than anybody else.
Yeah.
So
isn't it weird that we agree, at least some people do, that we set up a system where you can't actually take control of the government, you can't take control of society. Like we believe that we got that far in 1789. Why are we still doing this now?
Well, what you're describing us, and you're right about 1789, but that's a very linear concept. And the world is not linear and history is not linear. As Buckminster Fuller said, there are no straight lines in the universe. And he's right, there are no straight lines in the universe, Euclid notwithstanding. So I think you have to go back to Aristotle, who described politics as a cycle. It went from, aristocracy to dictatorship to democracy back to aristocracy. And Athens had a very radical form of democracy. I mean, when they were in their democratic period in the mid to late 5th century BC, it was, now they didn't have universal suffrage, it was men only, and the slaves couldn't vote, and women couldn't vote, and foreigners couldn't vote, and it was a little tighter than we have today. But among the male, the adults who could vote, they would all show up in the agora and vote. And I think there's about 8,000 or 9,000 of them. And they did some crazy stuff. I mean, the idea that if you lost a battle, you might want to punish the generals, or in those days, kill the generals. Okay, that's part of history. But they would have situations where they won the battle and they killed the generals because they didn't like the way they won. They like, hey, yeah, you won, but too many casualties, so we're going to kill you. And they did. So, and that was the problem with democracy. That, and by the way, that is not a constitutional republic, which is what we have.
Yeah, which is what we have. I make that point on a regular basis.
Yeah.
Like when people bitch on TV that we're trashing democracy. We don't have a democracy, and we never have.
We're not supposed to. It was not until the 1920s.
It's a constitutional republic.
Right. By the way, it was not until the 1920s when you had the direct election of U.S. senators. From 1789 to 1920, senators were either appointed by the governor or elected by the legislature of the state. And they were your state. They weren't the people's representatives. They were the state's representatives. So the state of Massachusetts, the governor of Massachusetts would say, okay, you're my senator, go down to Washington and look out for the state. And so that changed in the 1920s. But that's a really good example of how the United States was never intended to be a pure democracy. And the founding fathers read their Aristotle. They read John Locke and Thomas Hobbes and Rousseau, but they also read Aristotle and Plato and Gibbon's, the rise and fall of the Roman Empire. And they knew, again, from Aristotle and from Rome, that pure democracies always turn into mob rule. The reaction to mob rule is an aristocracy, but then the aristocracy becomes corrupt and becomes a dictatorship. And then the answer to dictatorship is a revolution, and you're back to mob rule. So it was a circle, not a straight line.
Where do you see us right now, like in society? I feel like there's a lot of mob components, but there's still some structure left that people respect.
Yeah, I agree. I think this is the greatest stress test for the Constitution since the Civil War. Now, certainly I was around the 60s, and there were anti-war protests, and in the 70s, the weathermen were planting bombs on Capitol Hill. This Capitol Hill riot on January 6th wasn't the first of its kind. They used to put bombs in the Capitol, and so people were killed. But in terms of the Constitution, this is the greatest stress test since 1859, 1860, and 1861. And it's exactly what you described, which is the Democrats and progressives and the Pelosi's and Bernie Sanders and AOC want to push towards something like the Athenian mob, something like direct democracy. So what does that mean? Pack the Supreme Court, get rid of the Electoral College. Let's bring in 2 new states so we can get 4.
Get rid of filibusters.
Yeah, exactly. Get rid of filibusters. Except if you get rid of the filibuster and you basically turn the Senate into something like the House. It's like having 2 houses of representatives. Simple majority rule. The leader sets this. No one doubts that's true in the House of Representatives, and it's supposed to be. But the Senate is supposed to be different. If you get rid of the filibuster, you erase the difference. And then if you get rid of the Electoral College, then all of a sudden the president is just a straight up or down electoral vote.
That's effectively what they did when they went to straight election of senators.
Correct.
They became residents of Washington as opposed to residents of their own states.
Correct. And by the way, I said that happened in the 1920s, and it did. That was the first progressive.
It happened actually in 1913.
Was it 1913?
Yeah.
Okay. I guess 1920s. I'm thinking of the female suffrage, where women were allowed to vote. But right. But that period, the broad period, I'll say 1890 to 1920, just to kind of bracket it. That was, and what else did we get in that period? The income tax and the Federal Reserve. Both.
We called it in Empire of Debt. We called it the Revolution of 1913.
Right. So, but the point is, the progressive era we're living through now is the second progressive era. The first progressive era was the one we just discussed.
Wilson.
But Wilson was the highlight, but it started in the 1890s. William Jennings Bryan and and all the things we mentioned. But the point is, there is what I call the liberal ratchet, but progressive ratchet is just as good a word. And everyone knows a ratchet is a tool that turns this way, but never turns back. So you turn it and it locks. Now you don't have to turn it again. If you do, it'll lock again, but it never goes in reverse. So the progressives are extremely patient. They get what they want. They get what they can when they can. And then there's a backlash.
What is it? All right. So let me ask you, because I think this is an important question. What is it that you think that they want like I would call myself a libertarian with a small L. I don't vote. I don't believe in politics. I frankly abhor politics, but I also think that if you ignore them, then you ignore them at your peril.
Right. Well,
So what is it like? I've read Lenin, Trotsky, Stalin. I've read what they wrote. I've read, I think, everything that Marx has ever written, and I don't get what it is that they are. What do they want? They want to live at the expense of other people.
yeah, that's a little simplistic. I think what they want, what progressives want in this country, is a U.S. version of what we just talked about in terms of the global agenda. I mean, so what do they want? Well, we just named all the things from the first progressive revolution. So it's the income tax, central bank, direct election of senators, et cetera. So what do they want now? Get rid of the electoral college, get rid of the filibuster, pack the Supreme Court, add 2 new states, 4 new senators, et cetera, which will make it easier to pass whatever else is in the progressive agenda. We know what that is because they tell us, this is my point. You don't have to concoct a conspiracy. You don't have to be a mind reader. You just have to pay attention. They tell you what they want. And modern monetary theory is a big part of it. So it's, it's unlimited spending. They go, if you read Stephanie Kelton, who's the big guru on modern monetary theory, she says you don't even need a government bond market. The idea there's too much debt, we got too many bonds, we're not going to be able to sell the bonds. She's like, why do you need a bond market? Just give wire instructions to the Fed and tell them to send the money right to anybody you owe money to. So why do you have to sell bonds to get money to deposit at the Fed to, or for the Fed to buy the bonds to give the money to the Treasury so you can pay your bills? Why do you need any of that? Just have the Fed wire the money directly to Lockheed or Raytheon or welfare checks or anything else. And the problem with that is
yeah. So the problem is that it obviates any kind of responsibility for the debt that you might owe.
Well, but Professor Kelton would say, who cares? Remember, Alexander Hamilton invented the government bond market, and the debate at the time, this is now 1789, 1790, early in the Washington administration, the United States owed debts from the Revolutionary War. We had just written IOUs, issued Continentals, that was the form of money, and they couldn't pay it back. And so the Congress said, well, that's easy, just default, screw them, too bad. And Alexander Hamilton said, no. He said, borrow more money and pay back that debt, and you'll establish your credit. And then when the new bonds come due, borrow some more and pay those, and just keep rolling it over. And all these people who say, well, you'll never pay off the national debt. It's nonsense. You don't have to pay off the national debt. You do have to roll it over. And that's the distinction. That's where the train wreck comes. You don't have to pay it off, but you do have to borrow more to pay off. It's like a Ponzi, in other words. And Alexander Hamilton invented that. It's been going strong for 230 years. Where does it run off the rails? Well, again, paying back the national debt is not necessary, but rolling over the debt is necessary. And that has to do with confidence and trust. And if people lose trust in the value of a dollar, or lose trust in the ability of the United States to be able to issue new bonds at rates lower than Zimbabwe, then it fails. That's when it fails. And that's the Argentina problem. See, the problem with Argentina, and again, I've studied modern monetary theory because, I always say if you're going to debate somebody, you have to know more about them than they do. So I've done a deep dive on it. And they say, well, the problem with Argentina is they print pesos, but they borrow dollars. And whenever you have to pay back the debt in a currency that you don't print, you can go bankrupt. But if you're paying back the debt in money you do print, you can never go bankrupt because you just keep paying it back. You just print more money to pay it back. But there are a couple of flaws in that. One is, and this is where Kelton really falls down, she doesn't understand international economics. She's just looking at a closed
like a closed system, right?
A closed system, right? But she doesn't understand. Well, yeah, but other things can happen. There are other ways to fail. One of them is exchange rates. I mean, one of our newsletters, Tactical Currency Profits, is focused just on that, just on exchange rates. And Yeah, you can print dollars and pay back dollar debt, but if the dollar devalues 80% against other forms of money, and you have hyperinflation, and they start sweeping the dollars down the sewers, all of which has happened before, and not that long ago. Um, uh, then all of a sudden it's non-sustainable. Nobody wants your debt. And by the way, this has happened. I mean, I just described it in the abstract, but in 1977, when Jimmy Carter was president, the United States Treasury issued treasury bonds denominated in Swiss francs. They were called Carter bonds. It was U.S. Treasury
Yeah.
debt.
I mean, I was a kid at the time, but I remember.
They were denominated in Swiss francs because nobody wanted dollars. And people go, well, the dollar would never devalue 90%. Well, actually, it did. If 1971, gold was $35 an ounce. In January 1980, gold was $800 an ounce. So if you value dollars by weight of gold, the dollar devalued 90%. That's a 90% devaluation because it took 10 times as much gold or 20 times actually to buy an ounce. Sorry, it took 20 times as many dollars to buy the same ounce of gold. So that means your dollar has gone down, in that example, about 95%. So those kinds of extreme devaluations have happened. People just don't know how to measure them. And there was a repudiation of the dollar in 1977 because we issued bonds in Swiss francs. And we pulled out of it, but that's the point. If you know it can happen, if you know it's a risk, you don't want to push the envelope. Whereas the modern monetary theorists, and Stephanie Kelton in particular, Bernie Sanders, she's his main advisor. He's chairman of the Senate Budget Committee, among other things. They don't understand international economics. And so that's where the booby traps are in the exchange rate and devaluation.
All right, let's move this on. I think we've probably beaten a dead horse so far. What do you think of cryptocurrencies and the idea of the Fed coin, which they've floated now, and I think they're in the period of accepting public comments on it? Like you have to say the idea and then take in a couple months of comment.
Yeah, under the Administrative Procedures Act, if you have changes in regulations, and this applies in some fashion to the Federal Reserve, you have to put out a proposal, and then you have a certain comment period. You can rush it, but generally 90 days. And then the comments come in, you have to have hearings, you have to consider the comments, you don't have to agree. But when you issue the final rule, you have to explain why you didn't, adhere to a certain comment. So there's a whole process involved. But we're not at that stage yet. First of all, there's a lot of confusion between cryptocurrencies and central bank digital currencies.
Okay, that's kind of my question.
CBDCs. I just want to say CBGBs, but CBDC, central bank digital currencies, are not cryptocurrencies. Or if you want to lump it all in, the greatest cryptocurrency in history is the US dollar, because they haven't been, the last time the Treasury issued a paper bond, like the kind your grandmother would have in her attic and clip the coupons, I think it was 1979. So the dollar has been digital ever since. The message traffic is encrypted. So you can think of the dollar as a very successful cryptocurrency. But the difference is that the central bank digital currencies are the same currency in digital form. So it'll still be a dollar, it'll still be a euro, it'll still be a Chinese yuan, it'll still be a Japanese yen, but it will be in digital form only. By the way, you got to get rid of cash if you're going to do this, because people will hoard the cash. So that there's a whole separate.
Yeah, like they're hoarding coins right now, right?
Correct. Yeah, well, the coins actually have some value by metallic weight. I mean, if you have a 1965 quarters, it was actually silver. When I was a kid, a quarter was a quarter ounce of silver. And if you got one from the 60s, that's great, but they've been aluminum or zinc or something ever since. But yeah, that's a little different. But so these central bank digital currencies are digital. The message traffic is encrypted, but they could disintermediate the entire banking system, because one of the proposals is that you and I and everybody else in America, or the world for that matter, we'd have an account at the Fed. It'd be Madison Wiggin or Jim Rickard's account at the Fed. We'd have it on our iPhone. There'd be a little Fed coin app on the iPhone. And if I wanted to send you money, I could just do it. It'd be kind of like Venmo or PayPal, something like that. But I wouldn't need a bank account, neither would you. No checks, no wire transfers, no fees, MasterCard, Visa, all that. And MasterCard and Visa charge a 2.5% merchant acquirer fee. When a restaurant sells a lot of stuff, food for credit cards, they don't take those to the bank. They sell them to what's called a merchant acquirer. The merchant acquirer bundles a bunch of them, delivers them to, say, MasterCard. MasterCard pays them, and the MasterCard goes to the banks who issue MasterCards and collects all the money, and then they put it on your bill, and then you pay it. So that's like a 5-step process with fees all along the way. Well, if you could have an account at the Fed, you could skip all of that. You could skip all of it, and it would just go from my account to your account at the Fed. So interesting implications for the banking system, but that's a story for another day. So that's the world of central bank digital currencies, and the Chinese are furthest ahead. The U.S. is working in it's in the R&D stage at MIT, probably a year or two away. If it gets to it, then yeah, they'll have the kind of process we described earlier. But the U.S. is still a couple of years away. But the Chinese are furthest along. They have they're past the pilot program. The Chinese are actually going to use the Winter Olympics starting in about 10 days or so as a rollout of their central bank digital currency. If you go to the Olympics, no one's going.
Yeah, and they regulated blockchain too, right?
They have banished blockchain, banished use it, and Russia has, and actually the United States announced today that they're preparing to that they want to regulate crypto. So if you talk about cryptos, if you're talking about Bitcoin, Ethereum, and Ripple, and all that jazz, that's being squashed and regulated. Now the fans, the groupies, the Bitcoin groupies are going, you can never get us because we're in cyberspace, whatever. Fine, good luck. You'll be hunted down like criminals.
Somebody just tried to buy a piece of land from me only in Bitcoin, and I was like, with the regulatory environment that's going on right now, yeah, I'm not sure that's a good idea.
Yeah, you can do it. I mean, but you got to set up your own Bitcoin account, and maybe you have one to turn it into something you can buy a cup of coffee with, because good luck buying
land
coffee.
Is land, crypto is crypto.
I'm sorry. Yeah, well, that's right. Yeah, so the answer is, look, those things are out there. They're coming. Well, they're here. The central bank digital currencies are coming. There are other things underway. I'm actually doing a lot of research on this at the moment. I'm working on a new book, and this will be it's the first time I've written. I talk about it every now and then, but this will be the first time I've written kind of extensively on cryptocurrencies. So I've got some views there, some research that no one's ever seen before. So I think it may change the debate. But that said, yeah, they're out there, and if you want some, knock yourself out.
Yeah. All right. So give me one piece of good advice for individual investor, somebody who's trying to manage their own money right now.
Yeah. Well, the key is diversification. Now that sounds incredibly obvious. Like, oh yeah, big deal, Jim. Everyone knows diversification.
It might sound obvious, but it doesn't hurt.
But here's the non-obvious part. Diversification does work, in theory, not just in theory and practice. Diversification does work, but most people don't know what diversification means. So I run into people all the time. They go, well, Jim, I'm fully diversified. I've got 50 different stocks in 10 different sectors. I've got technology, consumer non-durables, mining, et cetera. And I go, you're not diversified.
You're in stocks.
you may have 50 stocks, but you have one asset class. It's called stocks. And they go up together and they go down together. Yeah, there's idiosyncrasies. And the thing is, the non-correlation of stocks exists when you don't care. It's precisely when you care the most that they all go down together. Correlation gets close to 1. So what's real diversification? Well, okay, have a slice of stocks. That's fine. Nothing. I'm not anti-stocks. Have a slice of cash. Have a slice of real estate. Have a slice of gold. Have a slice of alternatives, and that can be hedge funds, private equity, venture capital, art, fine art, whatever, land, farms, etc. That's real diversification, because some of those things will be slightly correlated. Oh, bonds. I forgot to mention treasury bonds. I like 5-year treasury notes, 10-year treasury notes. Some of those things are correlated, but not that much. And some of them are inversely correlated, meaning when one goes up, the other one goes down. And the one that kind of reduces the volatility of the portfolio is cash. Everyone hates cash because it doesn't have a big yield, but they underestimate the fact that it does reduce volatility. And it creates enormous optionality. If you're the one with cash and things really fall apart, you can go shopping. You're the one who can go out and pick up all the bargains, and no one's better at
'cause you
that
have the
than Warren
money.
Buffett. So I would counsel diversification, but my caveat would be you need real diversification, not faux diversification. So telling me you have 50 stocks, I kind of shrug and go, that's not diversified.
All right, one last question, and then we can kind of end it until the next time. How's that sound?
That sounds good. The questions are not a problem. Sometimes the answers are too long, but I can deal with the questions.
No. I just I'm wondering, like, from your experience, because you've had the experience that you have had in your life, what would be the worst thing that somebody could do right now?
Well, it's kind of the inverse of the best thing. If the best thing is diversification, the worst thing is over concentration. So when I run into people, I own some gold and they say, well, Jim, you have gold. How do you sleep at night? I'm like, you're 100% in stocks. How do you sleep at night?
Yeah.
And so when I see people like they're all in on Bitcoin, or they're all in on stocks, or they're all in on a Vanguard, Fidelity Index mutual fund, et cetera, or any asset class, that's an accident waiting to happen.
All right, sounds good. Thanks, Jim. It's
Thank
always a
you.
pleasure. From your bolt hole, in which I won't say where it is.